Okay, we should be live here in just a few seconds.
I'm looking for the thing.
Yeah.
Oh, there it goes.
Okay.
I think. Yep.
All right.
Oh, I gotta mute.
Yeah, you have to mute your audio there.
All right, I'm turned off there. Okay, let me just unplug here.
Okay, and I think there's a little bit of a lag. There might be a lag. So,
Oh, that's okay.
yeah, just for the visuals will be lagged. All right, so hey, I'm going to do a quick introduction. So this is Trading Homework broadcast. We're going to be putting together a watch list, talking about commodities, stimulus checks, emerging trends, and maybe build a watch list for next week. I'm joined by Chris, the Fibonacci trader, and also Mike Capuccio. So anyway, I guess let's get to it. What I didn't do, I normally do before I start up, is have a login to Paper Trading Interactive Brokers. So I'm going to do that now. And that'll let us look at options combos. So I kind of jumped the gun here starting the stream. But so yeah, let's talk about stimulus checks real quick while I'm logging in here. These aren't out yet, but everyone knows it's coming. And recently, when that has happened, like even though everyone knew that the stimulus checks were coming, it didn't matter. It still moved the market huge after it happened. And people can't spend the money until after they already get it. So by the way, just a quick note to anyone who might be watching this is I'm not actually doing any paper trading at Interactive Brokers. I do real trading in Interactive Brokers, but I don't show the real trading account here. This broadcast is happening outside of market hours, so all the prices we see are just like closed quotes. And the paper trading account is up so that we can analyze options combos and just look at the platform. So it's Interactive Brokers is who we're looking at. So if you use a different broker and you're curious about Interactive Brokers, then you might find it informative to watch this. So just kind of clearing off some of this clutter. Okay, so Interactive Brokers is open. So I wanted to talk about the cryptocurrencies first because people are going to be buying these things. They've gone up so much already, and there's a few different ways you could look at this. You could look at this like when the checks hit, everyone sells to the people who got the checks, and then there's no more incremental buying pushing them up, and that's kind of it, right? Like we have a short-term top. So that's a potential catalyst for a short-term top. Do you guys have any thoughts about that? Like, is this a trend that keeps going, or what? Go ahead.
I'm blowing it up now.
And 2,000 per second is being bought. I've read. I mean, it's insane.
Is that 2,000 coins or $2,000 worth of?
2,000 coins per second is being bought, and that's old news. So I don't know what it currently is.
Yeah.
But it's crazy. It's in the top 5 of the highest.
Yeah, and it seems like it's just more and more people are adopting this, and it's people will say, "Well, you're just buying a piece of code on a piece of paper. What does that mean? What does that really give you?"
Not much.
Yeah, it's a really great point.
The only thing it really gives you, in my opinion, is a piece of code on a piece of paper, like you said, and then you're dependent upon the next schmuck who's going to come in and buy your code at a higher price, so you can sell it.
Yeah, and so far that has kind of been working that way. A buddy of mine started mining Bitcoin recently. Let me jump over to the Bitcoin chart here. Let's just put up the Grayscale Bitcoin ETF Trust. And I think the way that this is priced right now is if a Bitcoin is $48,000, then this thing is around 48. Now, it's not going to match it exactly, but I think that's what we're seeing. So that it's not at $50 yet means Bitcoin isn't at $50,000. And this is showing us a chart that is just trading during New York hours. It doesn't even trade in pre-market or aftermarket. So here's a way that people are buying into this. I don't know that this is a closed-end fund. I haven't looked into it that much, actually. So,
I've heard Schiff talk about this, GBTC. I don't know anything about it.
Peter Schiff?
Yeah.
Yeah, he doesn't believe in Bitcoin. And my original stance on Bitcoin was that, yeah, there may be a limit to how many Bitcoins can be mined ultimately. However, I don't think that there's a limit to how many substitute or competing cryptocurrencies can be created. And we're seeing that. There's all these copycat.
Ethereum, Ripple, Dodge. There's ones out there I just can't believe.
Yeah.
It's a Ponzi. I mean, it is the Ponzi. The typical, the pure definition of a Ponzi, in my opinion.
So, we were talking briefly before we started live streaming, and one of the things I mentioned is I've got something to add to that. Is I posted a tweet a few days ago. It was a real short tweet. I said, macro take. The stock market doesn't crash until the Fortune 500 balance sheets are stuffed full of cryptos. And it's my view right now, my macro outlook is that we're kind of going into a 1999 kind of a year, because 1998, I mean, trading hasn't been this hot in my entire life since the 90s, and I wasn't even trading in the 90s. I mean, I was like a casual market observer. I was there. I was a teenager. But, I mean, I think we're going into a mania. And, I mean, I would say 1999 was a mania, too. And
even housing's like, it's insane.
Yeah, everything. Yeah. What was it like in your area?
In the South, and they're like 1.5 times the amount that they should be.
Yeah, wow. Well, we're in the Midwest, and it's so hard to buy a house here. My sister tried to buy a house recently. I think she did actually finally get one, but she was getting outbid. She was overbidding on these houses, offering way above ask, and she would still lose the deal. It was crazy.
Wow.
So,
what do you think? Not to jump off of crypto.
Yeah.
But something else that is baffling me is crude.
Yeah, let's talk about that. I wanted to get into energy, and if I was looking at the Sunday night open for the futures, let me get a FinViz window over here, and I'll put that up, because there's a beautiful little cup and handle on the 5-minute chart for crude right now, and it broke out.
I was looking at a Darvish box, like a 5-candle or 4-candle Darvish box on the daily, and I could not believe my eyes when it broke above.
Yeah, hang on. I'm bringing it up now. I'm going to show that chart for everyone. Okay, so crude oil WTI. First, I'll put the daily up there, and maybe you could speak to what you're seeing on that chart. There we go. So, okay, I see it. You're talking about right here in January, it's flagging sideways, and it rose, and then it went sideways for just a few days before shooting higher again. That's what you're talking about. It's just stair-stepping higher, right, since November.
We all remember this.
Yeah. Yeah, so gas prices, Micah just filled up her gas tank, and I mean, I think it was the biggest bill that you had in a while for gas, right?
Yeah, I mean, but it's still relatively, I'm so scarred from, 2008, 2009, when gas was, like $5, almost $6.
Yeah, that was 07, 08. That was the end of the Bush second term, right? And those oil guys that just pumped the prices so high.
So, like, everything's cheap to me. But when it really crashed, and I mean, people couldn't give it away, it went negative. I mean, that was like, I was like, it was this 19...
Yeah, this chart doesn't show it.
1990 again?
This chart doesn't show it, but it did go negative at the close. The reason that this chart doesn't show it is because this is a rolling futures contract. And so that negative $37 print that happened in crude oil futures, it happened on expiration day for that contract. And so this series, it was probably this day right here. Mm-hmm. And so what we're looking at right here was the next month out contract. And so the one that had the minus $37 print was already rolled out of this time series that's charted here. But yeah, just crazy moves in oil. And it's also really interesting about that is this drop was in April. So this was kind of like an echo crash. The stock market had already bottomed in March. And that oil was so bad, I think really helped keep a lot of people apprehensive about going back into the stock market. I was in a lot of the MLPs, the master limited partnerships that they make money from. They distribute profits in the form of a dividend, and I was seeing it. Historical dividend yields of like 100% on some of these, and we weren't going to pay that much going forward, but these things kept running up in April, even while the oil price itself crashed. And so that divergence, I had recognized that from the 2009 bottom of the stock market, is we saw similar divergences then, where some things continued to go lower, and some things had already bottomed in March. So, Chris, were you trading at that time?
When, in 2009, no.
Yeah.
No, I didn't start trading until 15.
Okay. Well, you've seen a lot of wild stuff since then. So you were around trading during the Volmageddon thing in
yes.
2018. That probably was one of the wildest things that you had seen up to that point.
No, actually, when I started trading... 15 and 16 was absolutely insane.
Oh yeah, the oil crash because of the bubonic plague scare. It was a similar thing like what happened with this coronavirus. There's a big scare that spooked the market, and it hit oil the hardest. And so I noticed that
2014, I think it was in October, November, oil was trading around 140 something, and then it just took a dive.
Yeah. Well, that was a pretty wild market.
I'll be honest with you, I don't know that was the play, though, because during Obama, he was scaling out of Iraq. He was bringing down a lot of movement. And my mantra has always been, if you want to know what crude is doing, watch what the military is doing. If the military is making movements, and they're moving ships, and they're moving rail, and they're moving boats or ships, then you're
logistics, military logistics. Yeah, that's I like that view because it dovetails in. Like, I kind of have a macro approach where it's kind of similar. Like, I have to follow politics, I have to follow the military, and not just of the U.S. but other countries, and also what is trade agreements likely to, how friendly are countries likely to be with each other. That's a part of my background, so I love that that's part of your approach. I think it's been very helpful for me at times, although sometimes I fool myself. Forex and currencies they're pretty tough for me. Go ahead.
I don't mess with Forex. I trade future currencies, though.
Yeah, so one of the things that is super important there is interest rates. And now the interest rates on everything is so low that it's, people don't even hardly look at that anymore. To me, it's wild. It's such a departure from the way it used to be. Back in like 06 and 07, the carry trade, long Australian dollar, short Japanese yen was such a huge thing. And I mean, maybe it still kind of is, but I mean, the interest rate spreads at that time were so big that, I mean, the carry trade was huge. And now there are still forms of that, but it seems like it's not as big of a factor. Sorry, You see me sipping on this beverage. What I'm drinking is. I'm gonna hold this up for the camera. Talking about social trends here. This is the organic seltzer from Crook and Marker that they sell at Costco. So just taking it easy tonight, having a little light beverage. Yeah.
So, I have not been paying attention to ag at all, to be honest with you. I heard that the numbers were going through the roof, though. And I wonder if that is pandemic related because people are afraid of the food shortage.
Yeah, I can flip over the grains here and we'll just kind of look through some of these charts. So let's do wheat. Let's start with wheat and then maybe look at soybeans. I mean, it looks like it's not really running like crazy in 2021, but it's still up a lot off the low. I can zoom out on this to give a little more historical context. Yeah, that does give a little more context. When I look at this, it looks like actually kind of a major breakout. 600 was always resistance for wheat for a long time, and it broke above it now. So that fits with an inflationary theme.
There we go. Yeah. Let me put up the weekly. Oh, okay.
Yeah, and look at corn too. So when we zoom out, we do see what looks like. Can we call it price inflation? I mean, I think if prices across the board are rising, and that to me, it looks like breakouts everywhere. Oats, not so much rough rice.
I heard that ag was going crazy. I never looked at it.
Yeah, and I don't trade futures, so I don't know that I have a really good way to express a view on this, but like soybeans look really strong.
Yeah. Yeah. I honestly don't. I guess inflation.
Yeah, and so I've been talking a lot about silver. I've always been a silver bug, and it seems like the past couple of years, silver's been pretty good for people who are in it.
I'm holding physical.
Yeah.
And I sold 11 coins for $4,400 on eBay.
So that's a lot higher price than what we see here with the futures. Futures look like $27 an ounce, and you're talking about selling at a price that's like $40 an ounce.
40. Yes, I'm selling it for 40, and I think I checked JM Bullion actually today, and they were out of stock of everything except for their new Egyptian run that they have going on.
Wow. Well, and so something interesting about that is that from Egypt, or is that like a U.S. mint line, or the different mint coins? There are ways you can trade those physical for physical. So what?
I don't know if they're from Egypt. They just have Ra and Osiris and a couple other,
Yeah, gotcha. It could be Egypt that's putting those out, but it's hard to say. I mean, anybody can make any coin. You just can't like make a coin that looks like it's from the U.S. Mint and say that it's a U.S. Mint coin when it's not. Things like that are frowned upon, but I think if you want to make a novelty coin, you can do that. I know someone that like put their own face on a silver coin. They were like, this was like 10 years ago. They were handing these things out. They were half-ounce coins. And it was like a business card. Yeah.
It was probably cheap back then.
Yeah. Well, it had done some running up and running down, and I mean, silver's been in a huge range. So I was in silver for this big breakout right here. I had a lot of far out of the money call options. I'm looking at the weekly silver chart, and again, it looks it looks a lot like those commodity charts we were looking at, where it's broke above some long-term resistance. And if it keeps running up, if people are wanting to see strategies for how I'm playing that, you can take a look at yesterday's show. I talked quite a bit in the beginning of that show about a long-term campaign in silver. So if you have a view in silver that's bullish, one way you could express that is by buying the coins. Another way you can express it is by doing the miners. And so I talked about some option strategies for the miners that are really managing a position and treating it differently depending on where the price of silver goes. So it's maybe a little bit more active of a position management than what a lot of people are willing to do. Now let's talk about the physical coins, because probably some people listening have physical coins. And I want to talk about something a lot of people don't know, is you can do what's called an in-kind transaction. And what that does is it defers your tax obligation. So normally if you go and you sell a large quantity of bullion, then you have to report that to the IRS. However, if you do an in-kind transaction, then you don't need to at that time. So an in-kind transaction might be if you have silver eagles and you swap them with a dealer who has gold eagles. So you're going from silver eagles to gold eagles, or gold eagles to silver eagles. Likewise, you could do this with bars. So if you have silver bullion bars, you can exchange those for gold bullion bars. Also, platinum and palladium also fall into this category, as far as I know. So I'm not a financial certified advisor or expert or anything like that, but a lot of my knowledge on this topic comes from spending a lot of weekends in coin shops. Yeah. So what you can do is you could play the gold to silver ratio. A lot of people who buy bullion do it for they're building a generational wealth, and so their plan is they want to have some bullion or coin asset that they can hand off to younger generations in their family. And so if you want to grow that money, you can't earn an interest on it, but what you can do is you can play the gold to silver ratio. And so to just briefly describe how one might do that is in 2020, the gold to silver ratio hit 100. It actually went higher than that. What that means is 1 ounce of gold can be traded for 100 ounces of silver. And so if you do an in-kind transaction, you basically just have to cross the bid-ask spread. But I mean, if you show up with an ounce of gold and maybe a little bit of pocket change, you can hand that to a dealer and they'll give you 5 rolls or 100-ounce coins of silver. And now the gold to silver ratio is something like 65. So what that means is you could take 65 of those coins and go get your gold ounce coin back, and you've still got 35 ounces of the silver left over. So you see how you've grown your money without actually earning an interest rate, and also without incurring a tax obligation. So this is a really interesting wealth building technique that really isn't talked about a whole lot.
Yeah, that's very cool. I like that.
Yeah, and
I did not realize that that's how even the gold to silver ratio worked.
Yeah, and that's also my explanation for why that silver breakout failed. 2 weeks ago on Monday, there was a huge silver breakout, remember? Well, yes. Gold didn't move. And so what happened is when the people jumping on silver, I think they maybe incorrectly assumed that just like grabbing the silver was enough. The problem is enough people have silver that they say, oh, you're willing to like pay such a premium relative to gold for silver? Well, I'll give you my silver, and they're actually exchanging it for gold, and then they switch it back. They take once the premium falls back down, they take the gold and switch it back to silver. So you could do this if you have a low transaction cost way to operate. So a lot of people who deal in vaults or dealers can do these kinds of things with very low transaction cost. Yeah. Yeah, but I mean, if there's just no physical silver supply, so right now, some of those sales you're doing, one reason that's smart is the physical silver, it gets backlogged, but it does eventually clear, usually. So you're kind of making a bet that, like, I'll be able to buy it back later without sort of the premium that's there right now due to the physical shortages. So, and then Micah's got a photography background, so she knows a little bit about like how it's used in film and things like that. Although I don't know that is there a whole lot of film used for silver now. I think it's been replaced by solar mostly, right? Like industrial uses of silver.
There's basically no silver
in photography anymore.
No.
Yeah, so that's an old thing, but it is used for solar and it's in cars and things like that.
Cell phones.
Yeah, that's a good one.
Cell phones, iPads, computers.
Yeah, I mean,
processors, I think, right?
Yeah, and it's probably in some of the workings of the camera, but I mean,
All right. Well,
the only thing I'm looking at on silver here is a double top. That's why.
Yeah.
That's why I'm like, that may not break.
Well, it does kind of look like that on this weekly chart. It looks like, it maybe made just a slightly higher high, and that's typical of a double top. That would be pretty negative. So, besides selling physical, do you see a way to would you express a view, negative view on silver in a margin account?
Say again.
So if you were doing trading in a margin account, would you express a negative view on silver, or would you just let go of longs? Like, are you bearish on it, or are you just saying like, well, probably like this is a good time, a good selling time?
It is a good selling time. If you make profits on silver, yeah, I would be hesitant to hold much longer.
Got you. So one thing I've been doing is I have been nibbling ever so slowly on out of the money contracts for Hecla mining. So I'm bringing up that chart. And like if it goes down, then I just get more cheaper, or I can get more duration. Like I don't care about the contracts I've already bought. Like I'm just trying to get more. So I'm accumulating. And it's with the precious metals, it's a really long game. It's very different from trading momentum stocks.
Well, I bought mine in, 2016? Let me go back to 2016. I think I bought it for around $16, I think.
Yeah, that was a great buy
That's
zone.
my cost basis.
That was a great buy zone for silver. I'm going to bring up the chart here. Yeah, great buy zone right there. And it stayed there for a lot longer than I thought it would. But to me, that just looks like...
Sorry, it was forever.
Yeah.
Very, very long time I had to wait.
So, Chris, are you in any of the pot stocks or any of the hot momentum stuff right now?
I am not. I do not like FOMO and following. I like trying to get in early, and unfortunately, I usually do.
Yeah.
Like a little bit too early, and then I end up having to roll.
Yeah.
Or, closing and waiting and then going in.
So that happened to me with NVIDIA. Like I got into NVIDIA because I had a really positive long-term outlook on it, and it's been basing for months. And it looks like just now it's starting to move again. But I burned up some money trying to play a continuation of the uptrend when it went into this flat base. But I mean, it looks pretty strong right now. Yeah, and I agree with you. I don't like these people that are trading GameStop right now that are saying like just put your money in there and hold, and if we all do that, then it'll work. Well, I mean that's not how I have ever traded. I never will trade that way. If they want to do it, that's fine. I mean I may not bet against them, but. I think that the most money's made by, getting in kind of early in some of these moves. So, I've got a watch list of some stuff that's pretty hot right now. We can go through that if you want, and some of it are bases. Like let's talk about the stocks that are basing right now. So one of them is Neo. And this has already been in a massive move. It's a 10-bagger already. But but it's in a pretty good base right now. Like if you look at it on the daily, it looks like it's forming this kind of like cup and handle kind of thing. That to me is a really pleasant looking base. And I mean, yeah, you could burn up some time decay in it if it doesn't go anywhere, but that, depending on how you structure it, it may not cost you all that much. If you're buying like short-dated, out-of-the-money stuff right now, then yeah, you're going to burn up capital. But there's other ways of playing it.
I see the cup and handle now. I see it.
Yeah. So Neo's one, and the way that I'm playing Neo, I talked about this yesterday, so I don't know that I want to spend a lot of time on it right now. Corsair. This might be one that you'd be interested in. CRSR.
I started watching Corsair. What is their ticker?
CRSR.
I am a big fan of their products.
Yeah, so they do RAM chips, right? And what else do they have?
Corsair has
solid state drives, probably.
Nice RAM.
Yeah, I think they do solid state drives too, right?
Storage. Yep, they do SSDs.
Yeah.
They have third generation 3400 speed writing storage. It's their P5, I believe it is.
So they've got an excellent quality reputation as far as I know.
Yeah.
And so like gamers use this stuff, probably crypto miners use this stuff. And yeah, it's top quality. I don't know where in the world they source their, a lot of these electronics companies have deals in like Taiwan or different countries that they're working on. I don't know what their arrangements are, but I would, if I was going to go huge in this thing, I would want to know those things. But as it stands right now, I do have a position. I just started buying it. What I did with this one is I put on a swoosh position, and so let me draw it in the options builder. And I'm not going to draw the exact position I have because I don't remember it, but let's just build one from new. I'll go through the process of how to build this. So it's $43 a share right now, and it looks like it's probably not going to go much lower. It doesn't look like it's going to break out tomorrow, but maybe in a week or two, it looks like it's got the potential to break out. So what I'm looking at is I'm looking for that low at 40 to kind of hold. Like that's kind of what I'm thinking on this one. And if that does hold, then it's got a higher low, and now it'll be a nice cup and handle base. I mean, if you can visualize in your head what this chart is going to look like if Corsair goes to 100, well, this is going to look like what we're seeing right now is going to look like a really beautiful base, like a flat base kind of thing, or like a cup and handle base. I'm kind of drawing it with my mouse.
I'm looking at support. Support. Well, what was once resistance looks like now has become support.
Yeah, so I see a few ways to play this. Like if you have a really bullish, I would say long-term outlook. For me, a long-term outlook is like a 1 year outlook. And I think you could take a view like that here. So there are more ways to play this than a swoosh, but let's start with the swoosh. So I'm going to come in here and I'm going to go to the options builder thing. Let's get a new tab and I'm going to put in CRSR. Your audio is probably slightly ahead of the video you're seeing. And now here's the basic idea. So, it doesn't have weekly options. So we're gonna have to do this slightly differently.
I'm in December 21.
Okay, you're in December?
Yeah.
All right,
Their
so,
IV is insane.
yeah, what is it, 100%? Yeah, that is high.
At the end of the year, it's 91.
Yeah, so these are pretty expensive. Like the furthest out of the money I'm seeing is a 70, and they're $9. So what that means is this, at expiration, this thing has to be at 80. So I think what I did.
Here. I got a 70 strike for $900 for one contract.
Yeah. Yeah, so I think what I did is I probably went to August. And we got the kitty cat here.
That's just a little too rich for me.
Yeah, it is. Those are expensive. But if it breaks out, they're going to get even more expensive. So if I were going to build a swoosh, like the idea behind the swoosh is when you look at it in the simulator, it looks like a Nike swoosh sign. And it's because you're buying an at the money contract, and you're buying some protection. So I'm going to look at August, 187 days ago, because it only has monthly options. We've got to structure this a little differently. So, oops, I need to go to Strategy Builder. So 45 is at the money. We're going to buy one of those, and then I'm going to put some protection on it. And ideally, you're going to have 2 weeks or more of protection, but probably not more than a month.
What are you going to August?
So I'm buying one at the money August, and then I'm going to go and I'm going to look in March, because the February contract doesn't have enough duration. So
with 5 days, what?
Yeah, only 5 days left. And so the idea here is I want to roll the protection before it gets less than 2 weeks till expiration. So I want to keep it always more than 2 weeks if I can. And the other thing is I'm typically looking at buying about 10% lower the protection. So if I buy a August 45 and a March 40, what you'll see here is the relative prices of this make sense. So the 45 is just about $12. The protection I'm buying should cost about 25 to 30% of the long contract I'm protecting. And so this adds up. And now if we look at it in the profile and we zoom out, you'll see it looks like a Nike swoosh. And your audio's ahead of, because I'm on the phone with you, so I'm going to just let that hold here for a minute until the video catches up for you.
Okay. So you're protected even if it just goes sideways?
No, if it goes sideways, I get hit with time decay. So that's a good question.
You're making that back
on the movement.
Right.
Yeah, if it moves either way, then I'm good. And so if I play this forward, you see like the time decay hits.
I got the Nike thing now.
Yeah, cool. And so I mean I do a lot of these positions because like the one you were looking at was $900, but it's got a lot of time decay on it. This one doesn't have a whole lot of time decay on it. It's $1,500 for one position. But here's the thing. The call that we're buying on this is at the money. So it doesn't really have any time decay as long as it's at the money or in the money. And so what happens is if the price goes down, say it falls 10 or 20%, well, then I can either exit the position at break even, at or near break even, or I can roll the whole thing down to a lower price and keep my call that I'm buying to be at the money or in the money. You see, so it doesn't have time decay. The time decay comes from rolling the put. Now, if you have weekly options, you don't have to go so far out on the call you're buying or the put. So the reason I had to go all the way out to August is because the nearest put I could buy is March. if you do this with February, you'll see it doesn't actually protect you, and I'll show you that. So if we do it with, if we do it with February, like, look at that, you only got a 90 cents contract right there, 10% lower. You know, it helps you maybe for a day, that's all, and then time decays, it fizzles out.
Yeah.
So
your data on that is 0.14. So that's almost 25%.
Yeah. This doesn't really protect us. This 40 from February. So, but the March one will, and if you let it get too close to expiration, though, then you're going to have problems. So, because what happens is in the final 2 weeks, if it doesn't activate, it burns up, and then you have no money to roll with. You see?
Yeah.
So, yeah. So anyway, that's how I'm doing these swoosh positions. I don't know if there's a different official name for it, but I call it that because that's what it looks like. It looks like a swoosh. So,
I don't use that.
Yeah, in fact, I don't know of anybody who does. This was something that I discovered from spending a lot of time in the simulator, and it works really well for me. But I'm a position trader. I've been a position trader for a decade or more. And so for me, it's intuitive. It feels good to trade this way. But let's talk about the contract you bought, because I do like that trade too. And I want to talk about how I would, the 70 from December.
Oh, no, I did buy that.
Oh, you didn't buy it yet? Okay.
No.
I got you.
I would have to do a lot more work on CS on Corsair.
Yeah.
But what I like to do is when I go further out, I like to try and ping with my Fibonacci time and price. And that way it will be either at the money or in the money by the time of expiration, or close to the time of expiration.
Got you. Yeah. Okay. So when I look at this one, what I'm thinking of is, if this thing breaks out, it could quickly get to 70. So this has a lot of time on it. But what you could do though is you could actually convert this into a swoosh if the price does break out. So let's say it doesn't break out and the chart pattern falls apart. You punch out of it, and sell it for the time value, and you're done with the trade. But if it does break out, it quickly runs to 70. And if it takes a month or two to do that, then guess what? Now you're looking at sort of like the same thing I was looking at earlier, where, with the August one, it's at the money. You can convert that into a swoosh. You may have to roll in on the calendar a little closer, maybe. Otherwise you buy the protection that's the right fit for that at the money call. And so this is something I talked about yesterday on the show with the miners. When I was buying the deep out of the money calls on the miners, the idea is in a few months, if they break out, then these become at the money. Once they're at the money, I convert them to swooshes, and then I play that whole thing out. And the end goal, by the way, of the swoosh trade is when the delta gets really close to 1, then I want to exercise those options and take possession of the shares. And you can either then start writing covered calls on them, or you can move them to a different account, like a cash account, and just bank them, and that's part of your wealth.
I don't like owning shares. I don't believe in the Ponzi market.
Yeah.
I truly, all I do is derivatives. But if there was ever one that I would own, I'm staring at it right now, which is CRSR. That's how much I like that company.
Yeah, it's kind of like an up and coming Nvidia. It's like if you could have got in on Nvidia, sort of at their first major breakout after IPO, like that's kind of what we're looking at right here. I mean, they have a great brand. I don't know that it maybe has quite the potential because it's a lower dollar item, but I mean, they could go into graphics boards too, and they may already. I don't know. Like it may be that they take NVIDIA chips and put them into Corsair graphics boards. I don't know.
I don't know. I just like their RAM. I like their storage. I like their keyboards, and I like their mice. That's
So this is a really great opportunity that we're really kind of on the ground floor on right now. And maybe it breaks out this year. If the market crashes or falls apart, then expect that this won't go anywhere right away. Okay, so I got a couple more.
Shoot.
Okay, this other one is AI, and AI didn't have weekly options either. But this is C3. I don't know a whole ton about this yet, but it looks similar chart to Corsair. And
I gotta get out of my daily and go to a 4 hour. Well, maybe a 1 hour.
Okay. Yeah, so it's IPO'd very recently. I'll put the 4 hour up, and you can talk us through that. I wasn't expecting this pullback that it's in right now. I think what I did is I think I just bought some slightly out of the money calls for March, and that position's at a loss right now because it's gone down. I bought when it started to break out recently, and it didn't follow through, so I was surprised by that.
I just need fibs on it. Well, it broke through on a retracement. It broke through from the low to the double top pretty much. It's gotten down to the 23, and if it breaks below, where is this? What number is that? If it breaks below 150 or 151, I would be getting nervous.
Okay, well, we're pretty close to there.
I don't know anything about AI.
Yeah, I think what they do is they try to improve the efficiency of manufacturers and machines and things like that. Like they put they put like sensors. Excuse me. They use sensors, I think, to try to feed AI and create a feedback loop where they can improve controls of things. I don't know a whole ton about it, really.
Machine learning?
Yeah, I think they use that to try to make everything in the real world work better.
Right.
So I don't think it's a data kind of a company. I think it's that they're working with manufacturers and industrial companies and things like that. But I mean that's just from a cursory glance my impression. But it caught my eye that it looked kind of like a Corsair setup where it recently IPO'd. It's making a base. The options market for this is not super liquid, and it's got I think only monthly options. So, well, we don't have to stick on this one. I got some more.
I think it just needs more time.
Yeah.
To construct something.
Yeah,
I see what you're saying, but for me, it's too new.
Yeah, you're right. Have you seen Snow? Snow looks like it's kind of in a base too.
Snow.
Yeah, Snow. Yeah, SNOW, Snowflake.
Okay.
Yeah, I think they have a data center business. And this one looked like it was maybe setting up, but this one failed also at the same
So it
time.
had a head and shoulders, and needed to drop to 84, got halfway there, and then the double bottom, and now it's starting to come back up.
Yeah, and then it stalled out. So,
Yeah, I think that's going to continue.
yeah, I don't have a position in Snow.
I wouldn't take it.
Yeah, probably best to wait on this one.
It looks like a little minor dark spots right there, and made a new high, and then just closed on the near low on that one candle.
Yeah, let me zoom in. It looks like maybe it's kind of breaking down on the short term.
Right? You got from, what day is that? From the 2nd, and then you have your dark spots from the 3rd to the 8th, and then you have a green candle, and then you have that big red candle. That is not a good-looking candle right there.
Right there on Feb 8th? Or are you talking about the one on February 10th?
February 10th.
Yeah. Yeah, where it opened up and then failed and really, really went down. It's from top to bottom, that's a 10% move.
Yeah, that's an ugly candle.
Yeah, and you know what? It looks like it's a big major failure of a breakout because that's kind of a cup and handle breakout that totally failed.
Yeah.
But then there's a nice hammer here on the 12th at the open. But I mean that doesn't necessarily mean a lot.
On the 12th.
Yeah, at the open. Yeah. All right. Yeah. Any other stocks you want to look at before we close out?
I wasn't even thinking about it. You want to look at the dollar real quick?
Sure. USD. Right here.
GXY.
DXY. Is it dollar sign DXY, I think? I'm looking on stockcharts.com.
There we go. There you go.
I think it's USD on stock charts. Does this look right to you, what I have up? I'll just give it a minute for the video to catch up.
Yeah.
So,
where are you? Are you from October? No.
So I'm looking at the U.S. dollar index. It's at 90 right now. Does that sound right?
Yeah, 90. I'm at 90 and a half.
Yep. Okay, we're looking at the same thing.
All right, so I am looking at a trend line that is just screaming downwards, and every time it touches the trend line, it reverses. And that has been a truth 1, 2, 3 times. But on the third time here, it broke above, and then just like that last stock we looked at, what was it, snow?
Yeah.
It tried to make a new high, and then it failed.
Oh, yeah, good call. It does look similar, actually. I see what you're talking about right here in February, where it looked like it tried to do a breakout, almost the same chart. A little cup and handle right there, trying to do a breakout.
It's trying to form a base.
Yeah, okay.
Like, this would be a viable dip, which is why I'm seeing that short potential in silver, I think.
I got you. Can you think of a catalyst, though? Could it be that the stimulus comes out different than what people are expecting? Could that be a catalyst for a stronger dollar?
Are you saying that they were expecting 2,000 and they're only getting 1,400?
Yeah, or maybe the 1,400 is just a headline number, and what we end up getting is not the $1,400.
Well, that wouldn't surprise me.
Yeah, or if they drag their feet on it some more, make it take longer.
Yeah, I could see them dragging their feet, and I could see a lot. Well, we've already heard a lot of resistance in the administration already. That they're worried about inflation and all this other nonsense. When they weren't worried, what was it? Not even 4 months ago, they were like, $2,000 UDI.
Yeah.
I don't know. That could be it. I really don't know.
So one way that I would express a view on a stronger dollar is I would look at TLT, and that's got a pretty liquid options market. I mean, it's dumping, man. It is really dumping. Oh my gosh.
I've been watching HYG too.
Yeah. All right. Let me look at that. Yeah. Well, the HY. What a pair trade this would have been. Long HYG and short TLT. It's like, holy cow. Man, how long can that go? I mean, how low? Let me put it another way. How low can TLT go? Because here's what this means. Like, the lower this goes, the higher the long-term interest rates are on government bonds. And so really this is a market maybe telling the central banks that, yeah, you can do these games you're doing, but you're going to pay a higher interest rate. And they've got short rates pinned at 0. So,
right.
I mean, maybe...
The only way they're going to be able to fix it is by stopping the QE that they're running for gas some decades. I mean, years.
Yeah, there's some real tricky reasons why they probably can't do that. So if you look at what they're trying to do, with IOER, I don't know if you're familiar with IOER, it's interest on excess reserves.
No, I don't know it.
So let me just briefly do a quick walkthrough on this, because I mean, even if you did, I would still want to walk through it. So back in 09, 08 and 09, I guess really it started in 08. I think they had a lot of these plans on the books. And what they had to do to address the problems in the banking system. At that time, Treasury bills, T-bills, were the collateral the banks used to sort of settle up at the end of the business day. And there weren't enough T-bills to go around for all the loans that had been made. So what happened is the banks started buying... Yeah.
Sorry.
Oh man, you know what? I gotta come back on next week, and we're gonna talk about GameStop, because I probably don't have time to get to it tonight. We haven't eaten dinner yet. But so what they did to address that issue is the central bank said, okay, here's what we'll do. Instead of you using T-bills to sort of settle your business between each other, because these banks were buying puts on each other, they didn't know who was going to not have a chair to sit down when the music stopped.
Right.
So the Federal Reserve said, okay, here's what we'll do. Is you can put your excess reserves with us on deposit at the Federal Reserve, and we will pay you an interest for that. And so what they essentially did is they created a deposit account at the Federal Reserve that paid basically the same thing as T-bills. That was the IOER, the interest on excess reserves. But here's the difference, though, is with T-bills, remember, there weren't enough of them to go around. There was a limited number of T-bills. That's not true with a deposit account. You can put as much as you want in a deposit account. You see? So they basically made it up like that deposit account was a T-bill account. And the way they got the money, the way they kind of like washed the money to get the money to pay the interest, is they did an interesting thing. Since the bank demand for T-bills and the kinds of high-quality collateral that the banks were using to settle between each other, the demand for that went down a lot because the banks didn't need it, right? So the Fed bought that stuff and used the interest that it got from those assets to pay the interest on excess reserves. Make sense so far?
I'm thinking that, correct me if I'm wrong, but I'm thinking what you're trying to tell me is that this is what became the overnight window?
Yeah, pretty much. Yeah.
For the overnight settlements?
Yeah, that's right. And so, yeah, they kind of changed the structure of that. And so the quantitative easing is the central bank buying up the extra stuff so that because there's no demand for it in the marketplace. So the central bank buys it and then uses it, the interest that it earns, to pay the interest on excess reserves. So it was kind of a net, like a washout thing. But here's the problem. The reason why they can't stop the quantitative easing is because, guess what? They're still paying interest on excess reserves, so there's no real demand from the banking system for those assets. And so if the central banks stop buying it, the interest rates on that stuff skyrockets. And then they're right back in the same problem that they temporarily stopped. They maybe thought that there was going to be a permanent solution that they could walk back out of. But
so the Fed's under. The Fed's under.
Yeah, if the Fed stops buying those assets, then the demand for it will drop and the interest rates will skyrocket. But that's the short term, the short duration, the high quality collateral. What you're seeing right now is the longer duration collateral is dropping in value, right? Because what if anything, the Fed may have to step in and start buying this stuff in a much bigger way, which would be even more quantitative easing. You see, but that's the problem is like your initial reaction was actually correct, right? Like it's the quantitative easing itself is what's making this stuff not really desirable.
Right.
So that's kind of the problem. It's a catch-22 that they're in.
Okay,
So,
I feel you now.
yeah.
So they're more inclined to keep purchasing the treasury notes and the
Yeah, sort of like what they're doing with they've made it so that they can buy HYG and things like that if they want to. And they've said that they might buy select high yield bonds. So if anything, I see more government demand for government or I'm sorry, for the bond market with the higher interest yielding stuff. And like TLT, interest rate has got to be getting up there. I mean, this is crazy. Let's zoom out and look.
I am at minus that massive dip in March. If you just kind of not look at that, the last time was...
You're talking about this candle right here where it went from 177 down to like, what is this, 150 or something? So this was the first stimulus. This was the first $600 check. That's what this big red bar was. So I think maybe what we're seeing here is a way to play the stimulus. You could front run it by selling this thing, and that's what people are doing. So if we got a feeling for when the stimulus might happen, perhaps we could put on a bear put spread with a pretty short duration. Might be one way to play it. Because TLT is pretty liquid.
I'm at my 200% fib for time price.
Yeah?
And I am, that's like February 16th. And I'm also I'm looking at a positive divergence in the daily. Let me see if it's still holding. Let me rephrase that. I was looking at a positive divergence.
So it's over. You're saying it's getting oversold, and so you're seeing some divergence there on what you're looking at. So for anyone watching this, Chris is he's looking at things on his screen also.
I'm looking for my oversold over what there is. Yeah. So the RSI, I use the 8 period.
Okay.
It is showing a positive divergence where you're making a lower low on the price action, but you're making a higher low on the RSI. And you're also making a higher low on the MFI.
And what bars, what time frame are you looking at? Because I just flipped to an 8 RSI.
That is from January 8th to February 5th. And then again, that next jump over is February 12th, this past Friday.
Okay. Yeah, okay, I think I see what you're saying. Like,
and it's on the daily, not the,
Oh, daily, okay. Yeah, so maybe the way to play this is with strangles, right? Because what can happen is if you get a move like... My intuition is to look at strangles on this. And here's why. So if you look at TLT right here, say you put a strangle on right here at 160, right before this big March bar where the stimulus happened. You could actually get hit on both sides. So if you leg out of the strangle as you get profits, so like take profits on the side that has a profit.
I'm sorry, did you say 160?
Yeah, at 160. If you bought a strangle at 160 before the stimulus hit, I'm sure the premium on it would have been huge. But the point is, like, you might have had a chance to leg out of both sides of the strangle with a profit.
Oh, had you? Okay.
Yeah. Okay. And so that's kind of my instinct here is to get a strangle and then leg out of it. Now the trick is the duration. So it sounds like we're gonna have to do a trading homework later in the week, figure out, when the timeline for the stimulus we can expect. So.
Right. We got plenty of time for this.
Yeah.
I mean, we've got to wait for a confirmation regardless. But I have a trend line that it needs to break, and so far it's just touching it.
Yeah, all right. Well, hey, man, it's been fun. I got to wrap it up and go get dinner. Micah's telling me she's hungry.
Yeah, it's fun.
It was fun. Yeah, we'd be glad to have you back on, Chris. And you want to tell anyone who's watching how to find you on Twitter?
Yeah, you could find me at Sell the Effing Rip Trader, which is STFR Trader.
All right, awesome. Thanks. Well, thanks for coming on, Chris. I'm going to end the stream.
Nice to meet you, Chris. Bye.
Bye.
Bye, everyone. Bye.